What is going on? My name is Colin Mason. Today we're going to be diving into VFAT, and a little bit about VFAT and just understanding what it is that it is a liquidity management platform. It's a third-party service that allows us to manage or actually enter liquidity pool positions on other dexes. So one thing we have to understand is that VFAT specifically is not a DEX. Uniswap is a DEX, Aerodrome is a DEX, PancakeSwap is a DEX. That's where all of the trading is actually happening. The VFAT, this platform here, is again a third-party service that allows us to manage those liquidity positions on those different dexes. And what's great is it allows us to manage multiple positions across different platforms, different chains, all in one central place. And so I believe I came across VFAT maybe a year ago. I'm shooting this on August 6th, 2025. I think it's been over a year that I've known about and used VFAT. And so it's a really, really great platform, again, that allows us to have a little bit more insight into our platform, into our liquidity positions, again, across different chains and across different dexes. Now, a few other things that they've added since the beginning of this platform is they actually have a portfolio section. This portfolio section allows you to see all of the different assets that you're holding as well as the different liquidity pool positions that you have. And what I also like about it, and some platforms don't have this, but VFAT does, is it actually shows the total debt that you have. So this is one of my wallets. You can see I have about $14,000 of my net worth here, and I have $4,300 in debt, meaning that I've used some of my capital as collateral, and I've borrowed the debt. I've borrowed capital against it to deploy elsewhere. That debt, I like to have that figure as part of my KPIs, my key performance indicators. So the fact that VFAT portfolio shows that, I really like. That's a big plus for me. The other thing that I really like using VFAT for is a research tool. If I were to click yield right here, you can actually see that there's farms, pools, and deposits. So one mistake that I made when I first got started with this is that I was searching specifically only on farms when really I was looking for pools. And so if you were to do some searching here, or use some filters, and you're highlighted in the farm section, you're going to be really limited. Now you need to understand the difference between farms, pools, and deposits here. Farms are liquidity pool positions that are earning a third party, a third token, right? So Aerodrome is a perfect example. If I'm providing liquidity, let's find one for Aerodrome here. If I'm providing liquidity in Aero USDC on Aerodrome here at this 0.3% fee tier, you can see that there's $62.8 million of TVL. And this projected APR at 29% is not based on trading volume. Because it's a farm, I'm earning the Aero emissions on that platform. Very similar to on PancakeSwap, if I'm providing liquidity in wrap BNB and USDT in this pool, I'm not earning the trading fees, I'm earning that third-party token of cake. And so same thing with Uni. If we were providing liquidity, we're earning the Uni token. So the farms is a good way to get started if you're wanting to earn some more of that DEX token. But, there's some more opportunities in the pools. And the pools is where we're earning the actual trading fees. And so if I'm providing liquidity here in this wrap Bitcoin, wrapped ETH pool on Uniswap on the Ethereum chain with $97.7 million in TVL, I'm earning trading fees. So as people on this chain and on this DEX are swapping Bitcoin and ETH back and forth, they're paying a 0.3% fee, and that fee is coming to me as a liquidity provider. And so, different functions. Farms, you're earning the third-party token. Pools, you're earning the trading fees. It really just depends on what your strategy is and what you're trying to accomplish. But I like how VFAT has split that up. And again, what's great is that it aggregates all these opportunities. And so for me, it's a great way to hunt for opportunities. So if I were to come here and just look for, wrapped ETH pools, I typed in wrapped ETH, and you can see all the different pools that have wrapped ETH. You see this Link wrapped ETH pool here. You have your Uni wrapped ETH, or your wrapped ETH USDT or USDC pools across different chains, and then all of these are Uniswap. But if you kind of keep scrolling, you can see a few Aerodrome pools or a few PancakeSwap pools, et cetera, et cetera. So great tool for research. And then right here in the deposits, this is if you were to actually house capital here, you would see this here. So if I were to open up a ETH USDC pool, which I'm going to be doing during this video, you'll see this position right here. You'll see the asset pair. You'll see if it's in range or if it's out of range. You'll see the deposit value. How much is it worth in terms of dollar value? The daily rewards, this is a projection of how much you're expected to earn based on the APR and based on how much you have a deposit, etc. And then the actual earn, this is the actual amount that you've had available to claim as rewards. And then the APR, which again is fluctuating based on volumes if you're in pools, or based on the voting structures of the farm. So lots of things going on here with VFAT, and I'm trying not to overcomplicate it, but really what I wanted to show you is actually opening up a position. And what I love about VFAT is there's a great zap in feature which allows us to enter into a liquidity pool position without having to have the exact amount of the quantity of both assets. So this gets a little complicated if you don't know liquidity pools, but if you're part of the UIG, make sure that you're going through the different quests that teach about this stuff. And if you're part of the YouTube channel, make sure that you're soaking up as much as you can. And if you really want to dive deep into this stuff and have a roadmap to work through inside of our DeFi quests, I'd highly recommend joining the UIG. But a little lesson here for you real quick. When we're providing liquidity, we are selecting a range at which we want to provide that liquidity. And if we're in range during that time, we're generating fees, which is great. That's what we want to do. Now, in VFAT, what is great is that we can select the range by using these toggles here. And so you can see the width of this pool. I'm not going to do peak. Let's find a USDC, wrapped ETH USDC. Actually, let's back up because I want to filter. I actually want to find a pool that I want to enter. So for me, I know that I have ETH and I have wrapped ETH in my on the Arbitrum chain, right? So for me, I'm going to come in here to the filter button. You can see right here, filter. I'm going to, instead of all chains, I'm just going to select Arbitrum. And then I also want to select, in terms of the protocol, I want to operate on a Uniswap pool. So I'm going to click Uniswap right here. Now you can see all of the ETH, because I did designate ETH in the search bar here. You can see all of the ETH pools on Uniswap on the Arbitrum chain all listed here. And it's actually filtered by biggest TVL. If I wanted to do the opposite way, this is the smallest TVL. For me, I don't touch any of those. So I'm looking for biggest TVL here, and I'm looking for an ETH USDC pool. So you can see right here, CL10 wrapped ETH USDC, 0.05% fee tier, $76.5 million in TVL, and the projected APR is 69%. Now understand, this projected APR, this average APR, is going to be, it's a placeholder. It's not super accurate, because if you know what providing liquidity is, this APR is going to depend on a couple factors: the volume, the liquidity distribution, and the range at which you set. And so if I have a really wide range, the APR is going to be lower. If I have a tighter range, the APR is going to be higher. So let's click into the wrapped ETH USDC, and you can see a few things. Actually, I want to pay attention to these really quick because it's really important. When I'm looking at the TVL, you can see that there's $76.6 million deposited into this pool. But that's not all 76 million are earning, right? Only those that are in range. And so you can see this active TVL, and you can actually hover and it'll tell you TVL is the amount of liquidity deposited in the pool. The active TVL is the sum of all positions that are in range. So if I had a $100,000 pool and I'm in range, that $100,000 is counting towards this figure right here. So what this is telling me is that $66.2 million of the total capital is actually in range at any given time. So what that also is telling me is $10 million is out of range. And then the in-range TVL, which takes it a step further, it says is a portion of the active liquidity on the current price range. Only the liquidity within the price range receives swap fees. So that means that there's many ticks, there's many price buckets along our range. And if I'm providing liquidity from 3,000 to 4,000, that's broken up into a ton of tick spaces or buckets or zones that's being used to provide that liquidity. So in this in-range TVL, what this is showing us is that 363,000 is in that one specific price tick. If the price moves outside of that tick, let's say the price moves from 3,078 to 36.90. If it moves to that next price tick, this in-range TVL is going to shift and change. And so because there's going to be different amount of liquidity at that price tick. And so anyways, I just wanted to highlight for you, because total TVL paints one picture, but active TVL and in-range TVL paints a little bit different of a picture. So we need to know all three of those to really get a good grip on what's happening in this pool. Okay? Whew. Now what this is showing us here is the APR, right? So this is the annual APR, this is the weekly APR, and then this is the daily APR. For me, I just look at the I look at the yearly. For me, 69% makes a lot of sense based on this range. So now let's zoom our eyes to this side here. This is where we can manage or open the position, which is what I'm wanting to do today. You can see that I have a balance right here. It looks like about $300 of ETH. I'm going to open up a $50 position just to show you today. But what you can see is the range setting down here. So if I'm wanting to widen the bottom range, I'm clicking this minus button, and that's going to widen it down. You can see that the bottom half of my range is going to continue to move down as I go. And so if I were to put it down here at 3,200, let's say, and I want the top side at 4,000, I can click here and I can do that. So now I have 3,200 on the downside, 4,000 to the upside, and what that's showing me is a projected APR at about 65%. If I wanted to bring this up to, let's say, 3,500, I can certainly do that. Give me 1 sec to click this a whole bunch of times. I'm sure there's an easier way, but if I were to move this up to 3,500 right here, you can see that now I have a 13% wide range, and my projected APR is 96% based on this range, based on the TVL, based on how much capital is in range, based on the volume, based on all the factors. This is the APR that it's projecting. So let's say this is an APR, this is a range that I would like to set, 3,500 to the downside, 4,000 to the upside. I'm not even looking at the chart. I'm just doing this quickly. The next thing I can do is I can actually open up this position through a zap-in. And what I love about the zap-in feature on VFAT is I can just send one asset in, and it will automatically configure all of those all the transactions to be able to do it. So if I have just ETH, I don't need to try to calculate how much USDC I would need based on this range and the ratio. I can just zap in ETH, and I can automatically enter the pool. So for me, I'm just going to enter. I'm going to scroll this until I get to about $50. Just, something simple here. Let's go like here, $47. So if I'm entering, about $47 of ETH in, what you can see if I scroll down, that it will actually show me all the different transactions. So to zap in, what I'm doing is it's actually going to wrap it's going to wrap my ETH to wrapped ETH. Then it's going to swap wrapped ETH for USDC using this platform right here, and you can see there's a little bit of slippage, not much at all. Then it's going to add liquidity with my ETH and my USDC based on the ratio that I'll need for this pool, and it will also stake my NFT, and then I will be earning. Then I will be earning ETH and USDC as rewards, and it's going to take a protocol fee. So about 4 cents of ETH for me to do this. So understand that when we're using a third-party service like VFAT here, they're going to be charging you fees, and as they should. I want them to be profitable because I want them to have a good product and keep innovating and being around. So I don't mind paying a protocol fee if it allows me to do all of these steps really easy and really seamlessly. So let's actually open up this position. I'm going to double confirm everything. I'm on the wrapped ETH USDC, Uniswap, Arbitrum, 0.05% fee tier, wrapped ETH USDC. The price is in USDC. Yep. I'm going to send ETH. I'm sending in for about a little less than $48 worth of ETH into this position. I have a 13.4% wide position at 3,500 to the downside, 4,000 to the top side. I'm not doing automatic rebalancing or automatic rewards or automatic exit yet. This videos can be really long for me to go through all that. I'll cover those really shortly. The slippage I have here at 0.5%, and when I click deposit, I'm able to open up this position. Now, before I click that, I did want to cover these ever so quickly, and the reason being is because they are great features to use. However, you really need to know what you're doing to use these. So I would not recommend these if you are newer to this space. If you consider yourself to be a pretty good master of this liquidity providing and managing the positions, then you can start to use these to make the managing of the positions a little easier. Automatic rebalancing is basically saying, hey, if you're out of range, we're going to rebalance your pool to get back into range. That's extremely dangerous if you're setting tight ranges and you don't know what you're doing, because automatic rebalancing is going to be locking in and permanent loss, boom, 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 every single time you get out of range. So please use this only if you would consider yourself a DeFi master and you really know what you're doing. Automatic rewards, so that's going to be, if I were to click this, I can auto compound or I can auto harvest. So if I'm wanting to have my rewards claimed and just compounded back in, I can toggle that to turn on. If I'm wanting to auto harvest, that would just be claiming my rewards at, for specific parameters. I'm not going to do either one of those. And then automatic exit. This is if I want to set parameters for when I want my position to be closed. It's kind of like a stop loss in a way. That's a cool feature for that. So if you want sort of a part 2 for me to dive deeper into those things, just let me know and I can certainly do that. But these are a little bit more advanced features to look at. The other one here, which is new, is this buy cover, which is basically an insurance policy on this platform. So that's kind of a cool feature. I've not done that yet here on VFAT, but if you have significant amount of capital and you're nervous about smart contract hacks or something happening, you can always look into purchasing insurance through VFAT that would cover your position in case something happens. My one piece of advice is read the small print and make sure you understand what's actually being covered, because I don't want you to think you're covered and you're actually not, based on the small print or based on what's involved. So just understand kind of what you're doing before you buy this cover. But that's another feature which I think is really cool and what separates this platform from a lot of others. One thing I should have mentioned right at the beginning. What we need to understand about VFAT is we are depositing our capital into their what they call the Sickle contract, the Sickle smart contract. So the way I like to say that is, this might be a stretch, but stick with me. It's sort of like a Venmo account. If I were to deposit $100 into my Venmo account, the $100 is in that Venmo bank account, if you will. So even though it's a bank account that allows me to send it to other people or allows me to connect it to other banks, the Venmo is itself a separate entity. And so the safest, if you want the safest and most secure way to go about this, I would go directly to the DEX, because it's introducing their Sickle contract, which is like a whole nother layer potential of risk, if you will. So I'm not saying that it's, what am I trying to say? I'm not saying that this is really risky. All I'm saying is that by using this third-party service in VFAT, the risk level has moved up a little bit because now we're relying on the smart contracts and the security of their Sickle contracts as opposed to just the smart contracts of Uniswap itself. So for me, it's worth the risk if it allows me to manage my positions a lot easier. But if you want the most secure path, going directly to the DEX makes more sense. Okay, if I were to press deposit right here, I have to switch to Arbitrum on my wallet, which I'm going to do really quick. Press for confirm. I'm just going to do this quickly here. I'm actually going to pause and come back maybe to make sure that I'm conserving the time. Okay, that actually didn't take long at all. So I've successfully deposited everything. It says transaction successful. And so now if I were to come up to my deposits here, hopefully we can see this. Here we go. So you can see that I have my deposit now available for me to manage. So what this is saying is I have $47.84 deposited into this pool. My status is I'm in range with this 13.4% wide range. I'm projected to make about 13% per day, and I haven't earned anything yet, obviously, because I just entered. But as time goes on, this earned is going to tick up in value, and you can see how much you've earned. And then right here, it's showing the projected APR of 95%. Now what I could do is I could do a whole bunch of things on the right hand side here. I can increase my reward, increase my position. So if I wanted to add more, if I wanted to scale my position up, I can certainly do that here. If I'm wanting to rebalance, I can do that as well. And so this is my current position on the top. Could be the new position. So if I wanted to rebalance and make it wider, I can do that like this, right? So you can see if I wanted to rebalance and click this right here, I'd be expanding my range from 13 to 16% wide. But understand when I'm clicking rebalance, it's not just doing that really quick. It's doing all of these actions right here. So again, what I like about VFAT is it's packaging up all of these transactions into one. However, we are paying protocol fees. So just understand that you're paying a fee to perform this action, but the ability to rebalance with one click, that's a big win right there. The other thing, we can withdraw. If we wanted to withdraw some ETH, I can close the position this way. If I wanted to compound, I can auto compound or I can manually compound with this function. If I'm wanting to harvest, so let's say, actually you can see my earned rewards already ticking up. If I wanted to claim these rewards, I can click harvest and receive those tokens. Now, when I'm clicking here, you see how it says token to receive? I'm actually earning, in this pool, I'm earning ETH and USDC. If I'm wanting to swap everything into ETH and claim everything as ETH, I wouldn't change a thing because you can see token receive ETH. If I'm wanting to, earn both the ETH and USDC that I've earned, I can just click that. Now I can earn the ETH and the USDC like a traditional pool withdrawal, or I can withdraw and harvest all into USDC, or I can harvest all into wrap Bitcoin, or whatever it is. This VFAT platform allows us to customize and really manage our position exactly how we want it. So if I'm wanting to earn rewards and swap everything to wrap Bitcoin and claim that, I can harvest my rewards into wrap Bitcoin. Pretty cool. So that's about it. If I wanted to withdraw, like I said, and close this position, I can do that here with a manual. If I wanted to swap everything into if I wanted to swap everything into ETH, same concept. If I wanted to exit to USDC, I can do that here. If I'm wanting to just remove the NFT, so real quick, if I'm wanting to keep my position active, but I don't want to host it on VFAT anymore, I can just click withdraw NFT, and the position remains open and working and operable. But now I can go and click into Uniswap and see my position and manage it over there. So understanding that basically I'm depositing my NFT into VFAT here to help me manage it. So there's an added layer of risk to that. But in my opinion, I think it's worth that risk because, again, there's so much customization that we can do here where we can't do it directly in Uniswap. So this was way longer than I anticipated, but this platform has a lot of in-depth stuff. So hopefully it brought you some value. If you have any questions at all, don't hesitate to drop them down below. And with that being said, we'll see you in the next one. Peace.